how the valuations are quite rich at this point in time. But for Bharat Dynamics, Motilal Oswal believes that the valuations are now turning reasonable and they have actually gone ahead and upgraded the rating on this one, and target price remains at 1900 rupees. Rajesh, what's your sense on this particular counter given the fact that for the past 3 weeks the stock has been under tremendous pressure?
Good morning, Srishti. Good morning, everyone. So looking at the near-term, short-term structure, this is the 6th consecutive week where we are seeing that, stock is continuously witnessing some supply pressure and lower high-low formation is taking place on the weekly chart, which clearly suggests that, there is a sustained supply pressure in this counter. If we analyze on the longer time frame, stock is still holding the strength on the long-term chart, but on the near-term to short-term perspective, there could be furthermore weakness we may see in this counter. Looking at the near-term structure, the immediate support area for the stock is placed at around 1440. If at all stock managed to hold this level in this decline, then some pullback action we cannot be ruled out. And in the pullback, again, 1600 is likely to act as a major supply zone for any minor pullback action. If stock manages to cross above 1600 level, then we may see some, buying interest to emerge in this counter, and then further higher level towards 1700, 1750 we could see in the short-term perspective. But still, one should not go in one go to buy this counter, buy in a staggered manner, as long-term structure is bullish. Once the market, is stable at certain level, I think some buying action would emerge in this counter at lower level. So for trader, 1440 is the stop loss, and those who wants to buy for little longer period can buy and accumulate in the range of 1480 to, on the downside, 1400 would be the range to buy and accumulate this counter. 1350 should be the stop loss for positional perspective for 6 to 12 month kind of time frame.
Okay, so that's the strategy and price targets to watch out for Bharat Dynamics. But Aditya, another stock that could be in focus today and slightly negative news flow coming in for this stock is Interglobe Aviation, or Indigo as we better know it. Now, the DGCA, which is the regulator, has issued show cause notice to Indigo for simulator training lapses for up to 1700 pilots. So this could slightly be negative sentimentally for the stock today. But on the charts, in the last 6 months itself, the stock has given an increase of more than 35%. Do you believe this up move could continue? Time now for some slowdown for Indigo.
It's more of a consolidation. I think that the stock, even if it enters into, might just enter. It's a very strong show, as you mentioned, for Indigo. And you just look at the chart setup. A rise, vertical rise, and then a consolidation, and then a rise again. Stock actually right now is going through a sideways consolidation with 6,000 acting as a hurdle on the upside and 5,700 acting as a support on the downside. If anything, after this news, even if the stock corrects, might just find support close to about 5,800, 5,700. And that could be a good idea to actually go long again on the stock for a target of 6,000, which is the upper end of the zone. And once 6,000 is taken out, my sense is stock will again resume its upward journey and can test levels of 6,400. So I don't think so. The stock will see too much of a downside correction after this news flow. Even if you see some profit taking, I think it will be an opportunity to initiate fresh long positions with a stop loss somewhere on 5,600 and look for two targets, 6,000 first and then maybe 6,400 eventually.
Dipan, a lot of hopes are getting pinned on what the early onset of festive season is going to bring up. You were just alluding to two-wheeler majors, and while they've been doing quite okay on a month-on-month basis, the PV segment of Motown is where you're seeing the slowdown. We were just chatting with both FADA as well as a very big India dealer as well, and they were all, raising hopes on festive season actually being that kicker for passenger vehicles. What is your own sense on how big a trigger is this going to really play out for consumption demand on ground?
That's right. I think that there are certain challenges for auto companies, and extremely selective one has to be over there. Very impressed with M&M's performance, monthly sales figures, and the quarterly results disclosure. We and our clients are invested in it. Disappointed with Maruti, and I'm not really sure how Maruti can lift its sales growth also, because the new model pipeline is not looking as interesting as it was 3-4 years ago when Maruti did exceedingly well. Whereas for M&M, we are seeing that the new models are doing exceedingly well. And of course, there is competition emerging from new players, BYD and other players also, which have come in the Indian market. Small volumes as of now, but certainly eating into the market share. So one needs to be a bit careful as far as passenger vehicles is concerned. Hopefully, lower interest rates may drive some demand over there. And fortunately for the industry, I think fuel prices have remained static. So overall cost of ownership and cost of operating has kind of flattened out. That's positive for the industry. But broadly on the festive season, really we need to keep our fingers crossed. India Inc. desperately needs a good festive season. We need the lift in the earnings for the stock market to go to the next level. Otherwise, we may be in this range for longer than what people are expecting at this point of time.
Oh, yeah, absolutely. In fact, as we gear up for the festive season, optimism at least is running high across key sectors. In hospitality, demand continues to outpace supply, keeping the momentum strong for players like Indian Hotels. In fact, the auto industry, like we were just chatting with Dipan about, it has been backed by a bumper harvest. The recent repo rate cut as well is eyeing robust sales, with FARA expecting a record-breaking festive run. And in the EV space, we were chatting with Group Shaman yesterday. They're actually seeing infra upgrades, innovation, rising disposable incomes, all of that accelerating sales. So from travel to transport, clearly all hopes are pinned on festive cheer that's all set to perhaps charge India's growth engine. In fact, let's hear out a slice of all the counterparts that we spoke with.
I think hospitality, aviation and tourism are just going to rise in India, and its contribution to GDP and its contribution to employment. We are just at the beginning. Okay. All those who have looked at this sector as a cyclical sector were not wrong, but if they continue to think that way, will become wrong, because yes, there is cyclicality in it, there is volatility in it.
The upcoming festival season, yes, we are quite optimistic, especially with the bumper harvest which we are expecting post the monsoon. We all are hopeful as far as the auto industry is concerned that this is going to be a bumper festival season for us.
There is an uptake in the EV space. Whatever the products are on offer are getting lapped up. Maruti, you mentioned, but I think it's driven more by the Mahindra and Tatas in that segment. And the adaptation is increasing. Earlier, there was a little bit of anxiety on the EV sector, which currently I'm seeing that it's reducing. I think it should be a larger percentage growth in that EV segment, certainly.
Okay, so that's the outlook coming in, and all hopes are pinned on the festive season, as we just heard. But Deepan, also want to come to you to get your take on the entire fertilizer space. Given that now China has loosened its exports of urea to India, and that largely the fertilizer space has not done much in the recent times, do you believe that on the back of this news flow, now that urea availability could become better for the fertilizer space back home, do you believe the sector merits a relook? Maybe any positivity if you're spotting?
See, first of all, fertilizer companies, they really surprised us. I think companies like Paradeep Phosphates, Coromandel, they came with great set of numbers. And within the fertilizer space, this entire DAP, phosphatic, single super phosphate, that segment, I think, is really growing pretty well because of basic underlying demand and need to kind of balance the soil nutrients. And I'm generally getting more positive on the sector. But you need to keep in mind that it's going to be highly cyclical. But look, long-term prospects of these phosphatic fertilizer companies is looking up, and a lot of the companies over there have extensively worked on backward integration, which was one of the risk factors, and that's gradually dissipating. So very positive on fertilizer companies, agrochemical companies as well. Their multiples also are reasonable. And if you have a long-term view, like 5-10 years or so, I think that these companies can deliver decent returns over the next few years or so, purely on account of the fact that, look, it's an absolute necessity in the country, and they will gradually grow their volumes, grow their capacities, improve their profit margins to backward integration. And it's a sector, where entry barriers are high, import threat is low. So, I think the prospects do look up for the fertilizer and the agrochemical sector. Go for the larger companies. That would be my approach.
All right. That's how you can look at some of these fertilizers companies. But with this, let's also get you some of the mid-cap bets from both of our experts. And Rajesh, you go first. Tell us, within the mid-cap basket, which is the stock that you're eyeing this morning?
So two stock ideas. One is from the automobile space, that is Hero Motor. Hero Motor is looking very attractive. The way stock managed to be breakout of almost 12-week consolidation on a weekly chart. We believe that this momentum can extend further, and possible upside for Hero Motor we could see towards 47.40 for trading point of view. So buy and accumulate would be the strategy, with stop loss of 4600 for Hero Motor. Another stock that we like is Avenue Supermart. Again, here also good traction in terms of buying. Stock is comfortably holding about to all its near-term, short-term moving averages. We believe that this momentum can extend further for Avenue Supermart. Possible target towards 43.20 we may witness. So one can buy this stock also with stop loss of 42.10.
Aditya, what's on your mid-cap list?
Not exactly from the mid-cap space, but a couple of stocks do look interesting.